So welcome to ApexInvesting.com. My name is Daryl Martin. This is a Be the Sniper, Be the Target video. It's a short video on our Simplicity indicator, which uses implied volatility from the volatility CBOE indices and feeds into the indicator to make sure that not only price but volatility are lining up at the same time. If they aren't, we have chop, but if they are, then we have the potential to trail a trade. So obviously there are risks in investing. Know what you're doing before you do it, okay? So this is just literally a very short video. So I have on the right here a trade we took today that we trailed today from this morning. And it was a buy OD divergence, I believe, was the trade. But anyways, we had a buy trade right there. And before it hit its take profit, Simplicity lined up, said, hey, you should trail this. How did it line up? What happened was both of the lines turned green, the dotted line and the dashed line, and they both were angling up before this bar closed. So all we needed for was that high to be broken, and then we could trail the trade. Now you can trail it conservatively using the low of the bar or the dotted line, or aggressively, meaning giving it more room, meaning the solid line. In this case, it would have been about the same difference, but you would have got a few more points if you use the dotted line. Sometimes you get stopped out sooner if you use the dotted line. So after there's a large down move or a large up move, like these right here, real clean down and up moves, confirmed by a sniper entry before the exit, both colors line up, both angles line up, and it breaks the high of the bar, then you can trail. Does that make sense to everybody? Any questions on that? So this is just a short summary of how I use Simplicity to trail sniper trades. I have not tested Simplicity in market replay, so I don't know if it'll work with the volatility indices or not. What I mean by breaks the high of the bar, this 30-second bar right here, when they both angled up, when it broke that high, that confirmed it's time to trail. So see where the arrow is on this bar? When this broke the high of that bar, it's time to trail. So the arrow is pointing to the bar. The next bar is the one that broke its high. But you don't have to do market replay to test it. You can just switch your charts to global drawing or global crosshairs on both, and then just move right one arrow at a time to test it out. Again, yeah, that was before the take profit on the diagnostic bar. Now, you can choose to go, you know what? Because here's what happens. And let me open up my little pointer. Y'all like my Harry Potter wand. Let's see here. If this closes up, this is going to angle up. If it's angling down and the next bar closes up, it's going to angle up. So you can tell if it's going to angle up. You can also tell if it's going to turn green because it has to close above the line or below the line to turn green or red. Okay? So when this bar closes up and that, with the two lines angling up, the next bar breaking the high, that's a Simplicity trail sign. And then combined with the sniper entry, lets you be more specific. Yeah, we can add that to the template. If you will Skype that to me, Chuck, on adding the current price. That's a good idea. So it can be used for entry, but it's a more aggressive style of trading. So can I go step by step on the process as I realize I control that trade? Yeah. So I got a, ODTX trade. I go long. It's going up. I look over at Simplicity. They're both green. Okay. Now they're both angling down, but I can if the next bar closes up, which it barely did, then they're gonna both angle up, and it did. When both of those angled up and it broke that high, I'm like, I definitely have a trail. I'm then gonna grab my take profit and move it way up here. Okay? Leave my original stop where it's at, and then once, and this is again the way I like to do it to give it room to breathe, is once it's broken up and I can start trailing with the Simplicity line above my break-even point, then I start trailing, and I just trail it with every 30 seconds, literally, because that's how long it takes a bar to form. I'm trailing it. Now, if it gets up to, like, say, a level or a deviation or whatever, I may go ahead and go, you know what? This is a point where it easily could turn around on me. I'm going to tighten up and go with a conservative, and then I'll start trailing right here, right here, right here, and then I'm out. And, I mean, that trade would have caught you, about 7.5 points. So keep the original stop and start trailing after break even. So now one other option, and I just want to give you some options, okay? So that's like just a hardcore, fast, simple rule, okay? Is you could decide to go ahead and start trailing right away with it to lower your risk immediately. Now you risk getting stopped out sooner, but you could go, okay, instead of having like, a full 21 tick risk, now I only have like a 2-point risk. Now I have like a 1-point risk. So you can look at the Simplicity inside the room, and you can see the price where Simplicity's at, and it actually marks on the side here. Let me see, I'll show you. Where is the room? There we go. Where'd it go? Get back over here. So see where it has 29.20.06 is this price, and 29.29.54 is that price right there. So it tells you what the price of Simplicity is of the two lines. So that's how you trail using the room charts if you don't have the data feed. Okay? And again, currently section 15, soon to be section 16. After I put the elevator up, we'll have the Simplicity information in it. So yeah, if there was like right now we have, if this was a valid short right here, then they're angling down, and so you could have trailed it if it already got in. Does that help make a little more sense of how I use it? I'm trying to just do small videos on it so it's not overwhelming. You can have your Simplicity chart anytime you want to. Just follow the steps in the Simplicity training. We show you how to do it. You just have to buy the data feed if you want your own, because you have to be able to get the volatility indices to get the implied volatility in order to make the calculations. All right, if you have more questions on that, let me know in the room. I'm going to go ahead and wrap this video up.